So Bitcoin was kind of sort of the original one, but Bitcoin is quite limited in what it can do. Ethereum is substantially more flexible and programmable, but has serious limitations around scaling and some other things. Solana is kind of an attempt at bringing the last 20 years of high performance computer science and distributed systems to a layer one blockchain. And the second thing that struck me about, I remember my conversation with Anatoly, is he's like, all I've done in my whole career is make things go fast. He's like worked at Qualcomm, at Dropbox, at Mesosphere, a few other places, and did that. And he was not academic at all, and was just like, I make things go fast. And that struck us as like, yeah, these distributed systems, like those problems in computer science have been understood for quite some time. And here's a guy who has been building various distributed systems for 10, 15 years and really understands them. And is just applying kind of this new crypto economic paradigm on top of that. Right. And that struck us as like a very differentiated kind of founder market fit.
And we had Anatoly on recently, episode 1302, for those of you who want to hear from him, from Solana's CEO. You guys then participate in Solana's initial coin offering or their initial token offering. I'm not sure what the term of art is today. I guess coin is not used because ICOs were kind of have a negative spin to them, but these tokens are released. You buy them for 4 cents, and you buy 100,000 of them, or $100,000 worth, or $250,000 worth.
You know, I don't remember how much we bought in the initial token sale, which was in May of 18. They did a subsequent round in August of 18, which we led, and then in 2019,
the company or in the tokens.
Solana Labs has never sold equity. It's all were just token sales.
Got it.
We led the round in August of 18. In early 19, after the market crashed at the end of 18, a bunch of investors wanted to sell and get out. We bought out a whole bunch of those investors. We led another round in June of 19, and then bought out more investors after the token launched in April of 20.
Wow.
So we've been accumulating SOL across various entities at various prices from 4 cents to $1.20. And we've been buying more recently in the public markets as well.
And then you are buying these. It's a token, but it's kind of a security. You then, I guess, get to distribute them to your LPs in your fund, like I would an LP in the launch funds. And then they can sell them if they want to, if they can find a buyer, and then lock in a reward without ever having bought into a C corporation, a Delaware C corp, correct?
I'll agree with most of that, other than I'm not sure I'm going to call Solana security, but directionally everything else you described, I would say, is accurate.
Right. So how does one determine, well, it kind of acts like a security in terms of the LPs, right? They have this asset that's gone up in value. So I guess that's one of the big questions here. So then you distribute them and they get to sell them and get a gain if they want. How do you have custodianship of all of these and make sure that you don't get hacked or something horrible doesn't happen? And then when you distribute, do you actually send somebody's wallet a bunch of SOL? Or do they have like a custodian? And then how do you mechanically make sure that this stuff is safe?
Yeah. So
I don't know if that's a stupid question or a really important question, because we don't have this question in startup investing because it's just a cap table and some CFO somewhere will, make a change in it and it's all paperwork, et cetera. This stuff just moves on Solana as really fast.
Actually, I think it's funny you made that last comment about the CFO, because even in that, there's a lot of trust involved.
Sure.
In that system. And it's like, who kept all the PDFs and like made sure the Excel document got updated correctly.
Yeah. Wilson Sonsini, Cooley, right. A bunch of law firms who get paid $1,200 an hour.
Yeah. Generally, a good rule of thumb is if you can unbundle a function of a law firm and turn it into software, that's usually a good business to be in.
Yeah, they like doing that too. Yeah.
But yeah, so look, when we started, it was a lot worse. We self-custodied a lot of stuff back in the day. Today, if you read our LPAs do say we can self-custody because whenever new assets are created, sometimes there isn't an institutional custodian provider at the time of the network launch. So from time to time, we do have to take self-custody, and there's a whole set of processes we do around that. But at this point, 98, 99% of our firm's assets are custodied with primarily with Coinbase custody, as well as with BitGo and Copper, who are institutional SEC qualified custodians.
So those custodians will hold your stuff and charge you 1% of the assets a year or something, I heard, or 50 basis points?
It's much lower than that. I'm not sure I'm allowed to disclose their pricing, but it's 1% would be extremely high.
So it acts just like a venture firm, except these tokens can be used in the real world. So you explained the framework before. You have people who are working on the project. You have speculators, investors, and then you have people who use the tokens. Is that right? Those are the general constituents in these groups?
I think that's approximately correct, yeah.
And so with Solana specifically, what's the value proposition? Because it's not NASDAQ for blockchain right now. It's something else. What is it today, or did they actually meet that original vision? And why has it all of a sudden become one of the top 6 or 7 crypto projects? What was unique about this one?
Yeah. So, again, Anatoly's original vision was, I want to run an order book on chain. This is well before DeFi was even a term. DeFi as a term was coined in about October or November of 18. And Anatoly kind of understood that blockchains are financial engines primarily, first and foremost, and that you should design a system from the ground up to enable price discovery is the foundational function of capital markets. And the way you have price discovery is you have an order book. Obviously, this is what NASDAQ and NYSE and plenty of other people do. So that was the goal from day one. The Solana blockchain launched on April of 20, so about a year and a half ago. And conveniently, right around the same time, a guy named Sam Bankman-Fried, who's the CEO of FTX, started to get real excited about DeFi and realizing it was going to change his FTX business as a centralized exchange. Started hacking around on Ethereum, was extremely unhappy with performance of the system, and looked elsewhere and ended up picking Solana to kind of go all in on for 2 reasons. Primarily, one was the understanding the importance of the order book as the fundamental technical primitive that underlies all of finance, and 2, the focus on intra-shard scaling as opposed to inter-shard scaling, which is more or less what everyone else has focused on in crypto other than Solana. And that led him to build this thing called Serum on top of Solana, which is a decentralized exchange and an order book on the Solana blockchain. And that kind of launched in August of last year. And since then, that's kind of sparked a real growth in a DeFi ecosystem around Solana, and which has then led into NFTs and all kinds of other really interesting things.
MicroAcquire is a startup acquisition marketplace that cuts out the middleman. Basically, that means they help startups get acquired efficiently. If you're a founder looking to sell, MicroAcquire is free, private, and involves no middlemen. You know how it is. You try to get a deal going. There's somebody in the middle. They don't care about the parties involved in some cases. They just want to close a deal. And you really have to wonder, who are they working for, right? You're always wondering about incentives there. Well, you don't have to worry about incentives at MicroAcquire. To date, MicroAcquire has helped hundreds of startups get acquired, and they facilitated hundreds of millions in closed deal volume. Their platform includes over 100,000 buyers, including me. I'm paying for the service. It's pretty great. There are thousands of startups currently listed for sale, and hundreds of successful acquisitions have occurred so far. Founders get free and instant access to over 100,000 trusted buyers while staying totally anonymous. On the other side of the marketplace, buyers like me simply pay $290 a year for access to deals on the platform, which means you're getting rid of the looky-loos, right? Unless you're serious about this, you're not going to pay the $290. So MicroAcquire helps startups find buyers. It's as simple as that. They'll help you start conversations that can lead to an acquisition in just 30 days for free. Just go to try.microacquire.com/twist. Once again, try.microacquire.com/TWIST.